All right, what's going on, guys? Tremaine here. I thought it'd be fun to do this Mission Possible challenge that ICT has shared in Twitter. Basically, looking for a 10 handle run in S&P using a limit order, and 10 handles for me is about right there. If my TP wants to act right. Let's try that again. I think I got filled right when I was trying to adjust my stop loss, but there we go. So let me set this up real quick. I am on my live account. I thought this would be a fun challenge for me even. Focus on making sure everything's right. So limit order, I'm looking at this wick, and that's what my entry is based off of. I can only use a limit order and an even number, as you see the rules he laid out here. So stop loss is a little less than 5 points. Take profit is obviously 10 handles plus 1 tick for commissions. I labeled this here as a breakaway gap, expecting that to stay open, and inversion fair value gap here. Bodies respecting consequent encroachment. We rally. Buy side is my focus. I'm going to take this off for now. You can pause it and read the rules if you want, but that high, clear as day, that's my drawn liquidity. And we're just going to submit to this. So this is my only trade for the day. We didn't take any trades on stream this morning. We wanted higher prices. Weekly forecast panned out to perfection. But it was really 9:30 opening, first presented fair value gap entry, and then it was out of there, like it was gone. So didn't get to participate this morning, but here we are during lunch. Just got back from the gym, and I was working out, and I was like, you know what, it would be fun to film a little video completing this Mission Possible challenge. So we have a few inefficiencies in here and this discount wick. If we go to a daily chart, I have consequent encroachment of the wick on a daily chart that is from our previous day. So if we go to the daily, here's yesterday's wick. This is kind of sloppy, I know. We'll do this, take that off. So yesterday's wick here, I'm getting consequent encroachment. Wanted to find support there. Same thing with the upper quadrant, and then takes us into previous day's high, which is Friday's high. So when we go back to the 1 minute chart and look at some details in here, finding support at consequent encroachment, we rally, getting above the SIBI. We close beneath it here, get back above it. Bodies unwilling to trade to the low end of it. That's what I like to see. And then we displace higher. We're inside of that wick, which is what I wanted to use for my entry, but following the rules that ICT gave, using a limit order and opting for a round number entry, which the closest thing I could find was 5,970. Okay, the next round number wasn't until like 965, which is, just working with what he told us to do. Quick glance at a 2 minute chart, down close candle, fair value gap, looking for support here to take us higher. And then the signature that I'll be looking for is a lot of speed above the short-term high. Now, once we close and work above the bodies here, I'll reduce some of my risk and trail my stop. But I'm observing how much speed we trade above the bodies, consequent encroachment of the wick, and then the high. I want it to be energetic. I want it to be fast, etc., etc. Label some of this. So risking around 4.5 points to make 10. We had a beautiful morning session rally straight off the open. It does suck a little bit, couldn't participate, but I posted a post on Twitter that the small wins that don't show up in the P&L as far as having the correct levels drawn up, that hourly fair value gap that sent price higher, we were anticipating that over the weekend on Saturday. That's a key level we're looking at, and to just observe the reaction as it sent NASDAQ higher was pretty fun to watch. So the P&L doesn't reflect. The P&L doesn't reflect the green day as far as seeing things in advance and it panning out to perfection. Again, looking for support in this region. A couple of inefficiencies here. This I'm treating as a breakaway gap. Best if remains unfilled. I'm trusting that our work down here is done using this inversion fair value gap because the bodies respecting consequent encroachment is already proven two things to me. One, when we're trading down here, we weren't willing to come back down to consequent encroachment of previous day's wick. So we traded down, fell short of that. Then the bodies here, respecting midpoint of the inversion fair value gap, unwilling to trade to the bottom of it. To me, that's a bullish signature. We rallied, taking out a short-term high with buy side in the crosshairs. This here. So that's my focus. I'm not going to do any editing to this one. I'm just going to let the whole recording pan out. Hopefully it's not too long of a video, but I am going to play some basketball with a friend of mine, and I got to get up out of here in about an hour. So I got to hurry up, let this render, and then I'll get it posted. Now this is definitely a situation where I would elect to use a market order. S&P, like, its pricing is weird because, I don't know, I'm so used to NASDAQ and its points, but S&P is like, it's way different. And I used to trade ES over a year ago, but it's a little different, a little slower too. And you could probably hear the people cutting the grass outside, which is very inconvenient. Where's my cards? Again, signature, only looking for speed, preferably when we get through the bodies of this swing high, kind of ignoring the wicks. If we were to trade through the bodies, I want it to be aggressive, very fast, kind of like use it as rocket fuel. And then I'll consider adjusting my stop, but I'm really not worried about it. So I'm seeing this little stalling as accumulation inside of the fair value gaps in that wick. Everything in the chart is giving me feedback that I like to see. We're staying in the upper half of the wick, this breakaway gap staying open, bodies respecting the fair value gaps in here, so nothing in the chart has me worried, nothing in the chart has me questioning my position. I'm not in a rush to move my stop or do anything extra to my trade. Everything's panning out just as I would expect. And then again, once we get through, here, let me just do this. Once we get through this, there. So I'm looking for speed through that rejection block. And then that'll tell me that I'm really in a good spot. We're 10 minutes away from the macro, 1250 to 110. So expecting movement soon, spooling towards that buy side. Okay, the way ICT describes it, the macro, its function is to reprice the inefficiencies or liquidity. It will seek inefficiencies or liquidity. So obvious buy side at around 5,978. As we approach that macro and get closer to it, I'll expect the algorithm to start heading for those buy stops. I'm not sure if I mentioned it, but my stop loss is under the breakaway gap. That's the logic for my stop loss. Because ideally, it shouldn't trade into that. If it's bullish, that should stay open. But I'm allowing for price to wick down in there should it want to do so. But that's where my stop loss placement is. Excuse me. I like that candle closure. Draw this out. Right there. Everything still stays the same. Want to see this stay open. Want speed above the rejection block. Then and only then will I adjust my stop loss. I may have to speed this one up and just do a quick voiceover if it takes too long. So now I'm looking at all of these. Let's see if I can zoom in a little bit. These SIBIs in here, expecting us to get above it and use it as a premium array. Same thing with this one here. So should we begin a rally, I'll take off this wick and I'll highlight the inversion fair value gap, and I want that to be used as a discount array. I'm seeing these highs as relatively equal, even though we had this long wick here. I'm focusing on the bodies and this high. That right there to me is too smooth because the bulk of the volume's in the bodies of the candles. So in my eyes, this needs to get cleaned up, and markets rarely top like this, especially when buy side is my draw. I like these little challenges that ICT sends out. Trading with one contract and just really low risk, aiming for kind of bread and butter setups. It's fun. It takes the pressure off. You're just not worried about your P&L. It's fun. I may do this more often just off camera, just try to find little bitty runs, make up my own little challenges. Maybe that's something we can add in the Discord. Come up with like a weekly challenge, something real easy, not impossible to do. I like the idea of just going into the market, looking for something specific. You're only looking for this much. You don't care if it rallies 50 handles, 20 handles. You're only looking for 10. It's fun. S&P is so much slower than NASDAQ. We are in a little bit of a range, but with buy side being right there, that's my focus. Clearly. I'm watching the SIBI in here. Again, want to see us get above it, use it as support. Same thing with this fair value gap in here. So there's nothing in the chart that concerns me. The bodies are respecting that wick that's drawn out with the blue box. That breakaway gap still staying open. Is it taking a little longer than I would have liked? Sure, maybe. But as far as the signatures and price action, everything is, as ICT would describe it, following the script. And now the last little cherry on top is if we can get that signature, some speed, through that rejection block and those, what I'm viewing is as relative equal highs. If we can rip through that, then it should be much longer till we reach for that buy side at 978. And I'm also looking at the clock. We're approaching that 1250 to 110 macro, so I'm expecting movement within that 20-minute interval. And I like where I'm currently positioned. So now I'm watching the inversion fair value gaps in here. I want to see that be used as a discount array, so we're going to go ahead and borrow this wick, and we're going to do this. Now it's a small fractal of price action, but also have a breaker in here. You have a low. Now this is cleaner if you go to like a 15-second chart, but you have a low, high, run out the lows. There's your breaker pattern. So I'm looking at the up close candle with the inversion fair value gap, down close candle, order block, all those things. Again, small range, small fractal, but those are things that I look at. Let's go ahead and outline this macro here to here. Now, should we rip through this high, my stop loss gets trailed underneath this candlestick's low, which is the high of the breakaway gap. That's the volatility that I like to look for. Now I want to see, can we get a strong close above that red line? I want to see us stay bullish, stay strong, maintain our momentum, and head towards the buy side. Not moving my stop just yet. It needs to prove to me that it's done working. The inversion fair value gap, prove to me that it's done using the wick. Once we take out that short-term high, if we can accelerate through it, then I feel comfortable trailing my stop. There we go. That right there is the signature that ICT teaches, and that's something that I like to look for. Now I'm watching to see how these candles close. Notice the body's respecting the inversion fair value gap. Okay, we don't want that to take us lower. We want to get above it, treat it like a discount PD array. All right, I like that closure. So trailing my stop up, there's no reason in my eyes to reach back for this fair value gap. So we can do that. Reducing my risk just by a little bit. I don't want to be too aggressive. Now, obviously, I'm reaching for that buy side, that blue line at 5,978. That's my draw. That's my target. Because I'm following the rules that ICT gave, I'm not going to close my position there. I'm aiming for 10 handles specifically, which is like 2.5, 3 points higher than that buy side. But I'm expecting price to trade to it and through it because we have old daily highs within the last 3 days. Looking at the, oh, that's NASDAQ chart. Hold on. Yeah, everything for ES looks good. All right, so I'm going to go ahead and trail my stop. These 3 down close candles, I'm treating that as one bullish order block. 3 down close candles that took out the sell side here, and then remember the breaker. Gonna trail my stop loss underneath mean threshold of the order block and underneath this up close candle. And that risk to reward, I mean, $60 to make 500. That's a steal if you ask me. Risk comes off completely once we take out that buy side. And then we'll see if we can get an extra spike up into my limit order. Live account, real money, real funds. This is my only trade for the day. I'm watching the volume imbalances and all the wicks in here. So volume imbalance, discount wick, all of that. Everything looks good. Buy side in the crosshairs. And then again, my risk will come off there. All right, there we go. We'll go ahead and, it looks like it's just gonna slam the limit order anyway. Lock in profit plus commissions. So no, that right there, that would be my take profit, but this video is specifically for ICT's challenge, mission possible. But beautiful delivery nonetheless. Notice the volume imbalance and that wick sending price higher. This was really fun. I really enjoyed this. Really, really fun. I don't necessarily get to do these sort of challenges on stream because I'm trading my normal size and, you know, whatnot. But when I cut the cameras off and I kind of just get to practice, even though I'm still recording, but I'm not live streaming, it's always fun to do these little like side quests on the side. I enjoy it. Down close candle, bullish order block. Now it could definitely reverse here and come back for my stop. I'm still bullish on the daily chart for ES and NASDAQ, so I think we can see a run way beyond where we're trading at now. But nonetheless, TP hit, stop loss hit, whatever. This was a really fun drill. And should our TP get hit, we might do a withdraw the profits and whatnot. Because TradeStation, I think if you withdraw your profits by like 4 p.m., it'll be in your bank account same day. So that'll be some nice change for my pocket. Watching the order block here. Now we can violate this because we just ran out buy side. Where is it at? Like that right there is a bread and butter setup. I will be content with that. Fair value gap entries, buy side. Just need a few more points to pass the ICT challenge. Looking at a 15-minute chart, everything still looks good. 5-minute chart for NASDAQ. I'm not going to show it on this screen, but your 5-minute chart, not NASDAQ, I keep forgetting I'm trading S&P. 5-minute chart ES, your 1250 candle. Prefer for that fair value gap to stay open. We had a small minor consolidation prior to that fair value gap forming, and then we displace. So if we leave that fair value gap open, I think we'll smash through my limit order and go even higher. It's just measuring order flow using those inefficiencies. I also want you to be mindful of when we got the displacement and the price run. Okay, 1250 to 110 is your macro. So we're sitting in this consolidation. Okay, I said that's fine because we're approaching that macro. Once we get to that 1250 mark, I'm expecting displacement. Okay, I'm expecting price to start spooling to where? Inefficiencies or liquidity. Where's our liquidity? There. 1250 to 110. There you go. That is it. Order block. Every PD array, the wick. Fair value gap, this should stay open. Inversion fair value gap, want speed above here. Delivery during the macro. The wick, the volume balance, takes us higher. Order block to the tick. There we go. ICT challenge passed. 1 contract. Live account. There we go. Plus 1 tick for commissions. So hopefully this was insightful. This was a lot of fun. Discord members, we're back live trading tomorrow morning at 9:15. I'll see you all then. All right. Peace.